All right, let's just bow our heads as we usually do, and wherever you are, you close your eye, however you see a man of prayer, and let's just pray. Father, we thank you, God, for this day. We thank you for your blessing and your mercies. In spite of what's going on, we have decided still to enhance our skills so that we can, with the time we have, still be able to develop our talents and our abilities so we can find sustenance for ourselves and our family. May you bless our efforts. And at the end of these presentations, I pray that we are going to take it into consideration and eventually be good at what we do and see the returns. So I ask your blessing on tonight's presentation. I pray in Jesus' name. Amen. All right, I'm just opening up. So I have the file downloaded and we're talking with the anatomy of candlestick. All right, let me share my screen now. Share screen, PowerPoint. All right, you're seeing my screen, my PowerPoint screen, right?
Yeah.
Okay, good, right. So we're looking at the language and anatomy of candlesticks. The language and anatomy of candlestick. So tonight our objective is to explain the parts of the Japanese candlestick, identify the three main types of candles, and classify candles according to their type. We're hoping that eventually we're just going to be able to just look at candles, and once you look at candle, you could just see what's going on. Because yes, for now, we do all our charts, we draw our lines and everything that we do. But it's actually you're going to reach to the stage where we can just look at a blank chart and be able to see all those things in there. It only comes by practice and practice. You know, there are many different kinds of candlestick also, which is not part of tonight here, but why they focus on Japanese candlestick? And look at the Oriental people, I mean, the Japanese and so on. These people are people who study things a lot and they really give a lot of meditation towards things. So some of the other types of candlesticks aren't as effective or efficient as is the Japanese candlestick. And candles tell, just as a picture tells 1,000 words, as they say, so a candle tells a lot of story. So just as humans, candlesticks have different body size. And when it comes to trading, it is important to check out the bodies of candlestick and understand the psychology behind it. Look at it, a regular candle. Many of us, well, we may not have candles in our homes now because our power don't go there often, but you can look at different candles and you can gain insights on it. If you see the candle and based on how it is, you say, you know, that's a new candle. Or they just light it for maybe 10 minutes. You can look at a candle and see it has been burning for a while. Or this one has been burning and it melted and it burned. You go on All Saints and you go on the graves and so on. You can see candles, and even if you didn't see them in action, you can tell a lot about them by just looking at what remains, the anatomy of it here. You know, you can look at it and glean a lot from the conditions under which it was burning. Likewise, in trading, we can do the same with candles. Unlike just looking at it here, it says we can understand the psychology behind it. So every candle should tell a story, and we should understand why this candle is formed and why behind, the why behind every shape of candlestick. So why candlesticks are important to your trading analysis? Candlesticks are important because it is considered as a visual representation of what is going on in the market. You know, we can use lines. Also, we can switch our charts. So you on a trading view platform, you have the option of switching from candles to lines. But lines tell a story, but candles tell a bigger story. By looking at a candlestick, we can get valuable information about the open, the high, the low, and the close of price, which will give us an idea about the price movement. So you just come into your house and you realize somebody has broken into your house and you're missing things. You are very uneasy, you are scared, you feel violated and so. If after 2 days you have no idea how the person entered your house, I guess you may not even want to sleep in the house because your mind could never be settled. But here's what, if you know or you identify exactly how and where the person came in, your mind is a little more at ease. Why? Because you can fix, you can patch up, you can bar, you can do whatever and safeguard and protect what you have. So knowing where the thief enters gives you a little more confidence in that you can prevent the entry the other time. Likewise, when we look at a candle, it gives us valuable information. We know exactly what's going on at the market here. Candlesticks are flexible. They can be used alone or in combination with technical analysis tools such as moving averages, momentum oscillators. They can be used also with methods such as Dow theory or the Elliott wave theory. So I personally use candlestick with support and resistance, trend lines, and other technical tools. So as much as we can use it with all these other charts and other market tools, the easiest tool that is available to us here is using it with support and resistance, trend lines, and a few of the other technical tools. We use the Fibonacci retracement and those kinds of things. Because as much as you have all these tools available, nothing beats simplicity. Some of the other tools that we can use and the other means of analyzing, they clutter your screen. So you may look at your trading platform and you see so much lines. It's like you secure something so much, you and all can even find it where you hide it. So you don't want to have your chart so tied up. So I have 30 different colors on my chart. It looks appealing to the non-trader. But when you look at it and you see that color, what color green mean again? You have to go in a book and see, oh, green means this is my take profit one. And you see this other blue line. What is that blue again? You have to go back here. Oh, that's my trend line. And yeah, so at the end of the day, having too much things on a chart makes it even more difficult and it defeats the purpose. So let's see what happens. The human behavior in relation to money is always dominated by fear, greed, and hope. The human behavior to money is always dominated by fear, greed, and hope. So I want $100 from you. I say, here's what I'm selling you this thing or whatever the case is here, but I wouldn't tell you I want 100 first. If I tell you 100, you might say, no, that's a lot of money. Give me 15 for it. Okay, you give $15. I say, okay, I'm almost there, but I just need to finish up something. So I need another 20 to finish up here. You say, well, listen, I gave 15 already, I don't want to lose me 15, but if you say 20 more, I'm almost certain it's going to be here. So I'm going to give you the 20. So you're already giving me 35. And because you give me 35 and I tell you, well, now I'm finished with the thing, I have to paint it now, but I kind of short on money for paint, so I need another $10 to do that here. You're hoping that when you give me that $10 now, that's going to be the end of it. You're going to have your item. And you give me the $10, and after I say, okay, yes, I paint it, but here's what, I want to engrave it too. If I had told you initially, give me the $100 for painting, engraving, and whatever I have to do, you may not. So that's where hope comes in. And then now, initially, if I told you it's 100, you're fearful. No, you wouldn't enter into that. But you can take the chance with 15. So I sort of break your fear. And then because you fear that you might lose the 15, let me just put that 10 on it again, hoping that that 10 would pull me through and I wouldn't lose. So that's fear. But here's what, greed is also a motivator, because you're hoping, here's what, at the end when I get it, it's going to be worth a lot more than that. So these are things that are being played upon. But here's what, candlestick analysis will help us understand these changing psychological factors by showing us how buyers and sellers interact with each other in the market. So candlesticks provide more valuable information than bar charts, using them as a win-win situation, because you can get all the trading signals that bar chart generate with the added clarity and additional signals generated by candlestick. What is that really saying? It is saying, here's what, the bar chart has the information that we need, but the bar chart is too, how should I say, the bar chart gives us a summary of what's going on here. I cannot make enough inference from the bar chart. The candlestick tells me exactly what's going on as it happens. So I look at a bar chart and I just see all the information together, but I want to know Okay, so my bar chart shows me 20 persons are in room A, 4 people are in room B, 30 persons are in room C. That's what the bar chart shows me. But a candle may say, yes, there are 20 people in room A, but they came in at this time. 2 people came in at 1 o'clock, 3 came in at 10 past 1, 4 came in at quarter past 1, 5 came in at 20 past 1. So now we have more details. Yes, I know there are 20 people in the room, but now because I have more details as to the timing, I now have more information. At the end, when I step into the room, I know the same thing the bar chart shows me, the 20, I can see that. But now I have added information. That's what Candlestick does. They provide more valuable information than what the bar chart does. And understanding the different types of candlestick here would put us in a position to understand the mindset of people in the market. So candlesticks are used by most professional traders, banks, and hedge funds. These guys trade millions of dollars every day. They can move the market whenever they want. So we are just a small fish in that big pond here. So we have to understand, if these big guys are using it, why shouldn't we use it? They can take your money easily if you don't understand the game. So when you see the big spikes in the market, it's those guys and them who are doing those things here. They can put in their money, they can pull out the money, they set the rate, and we can lose if we don't understand the mindset. Even if you can trade $100,000 trading account, you can't move the market. You can't control what's going on in the market. That's just little money. There are about $6 trillion that are traded daily. So you little 100,000, even if you don't trade, the market doesn't miss you. But using candlestick patterns would help you understand what the big boys are doing, and will show you when to enter, when to exit, when to stay away from the market. So even though the market runs 24/7, 5 days a week, there are times you have to stay out of the market. I've been doing good at that. When you understand the charts and you mark up your chart, you know when to stay out, you know what to look for, when to enter the market. And this is very important. And that's why we use the candlestick along with support and resistance and our trend lines to know exactly when we can enter the market and when we can trade. So again, if anytime you have any question, you can just ask your question at any time. We can always pause and take questions or comments. So what is a candlestick? The Japanese candlestick are formed using the open, the high, the low, and the close of the chosen time frame. So there are 4 elements to a candle or a candlestick. 4 elements. You have the high, that's the highest point that the candle would have reached. Low, the lowest point. You have where the candle open and where the candle close. So here we can see we have a bullish candle here. Bullish means it is going up. The market opened at this point here, that line here. So the bottom of the candle always show you where the market opened. So the market opened at the bottom here. There was a time the market went down to that low point. So it shows you the low. So what we can safely say looking at this candle is that the candle before, which we cannot see, closed at that rate here. Because wherever a candle closes, that's where the other one opens. So we know the candle before was a lower candle. That's why we say it's a bullish candle. We can see it going higher. This candle is higher than the previous candle. Why? Because a candle opens where one closes. And if this candle opens at this rate here, it meant that the one before closed right here. So the candle opened here, it went down low, but it shoot up high as this point here. But then it came back down a little and it closed here. It is a bullish candle because it closed higher than it opened. That's here. So we have the lower shadow wick, that's the lower wick. We have the upper shadow wick, but then this here is the real body of the candle. Again, it's a bull candle because it closed higher than where it opened. Unlike this candle here, which is a bear candle, it's a down candle, as we say, it's a sell candle. Why? It opened up here. So we can safely say this candle it is possible that this candle could follow this candle in sequence. Why? Because this candle closed right here and this one opened right here. So this is a possibility for it to happen here, right? So the candle opened here. That's when the rates open here. It went to a high of this rate here, but then it went down all the way low down here. and it went back up a little and it closed here. So because the candle closed lower than where it opened, it's a bearish candle and it's a down candle. It's trending downwards in a bearish market. Any questions so far? Are you hearing me?
Yes, I heard.
All right, good. So I need to make sure because sometimes these,
Yes, we hear him. Yes, we hear him.
yeah, the Zoom and them when they're ready, they drop you off and you think you're talking to people and we're there, right? So this understanding this candle here, looking at it by itself, you have an idea as to what happened to the previous candle. So any candle, you look at it by itself, it cannot tell you what is going to happen to the next candle, but you can know what happened to the previous candle. What it can advise you about the next candle, you know exactly where the next candle is going to open. So we know the next candle following this one is going to open at this rate here. And we know the next candle following this one is going to open at this rate down here. That's what we can see so far from this candle. Let's go. If the close is above the open, we can say that the candlestick is bullish, which means that the market is rising in this period of time. Bullish candlesticks are always displayed as white candlestick. Sometimes we color them, we want to put them blue. If we want, we can manipulate our colors if we choose to. If the close is below the open, we can say that the candlestick is bearish, which indicates that the market is falling. Bearish candlesticks are always displayed as black candlesticks. Sometimes we put them red, but it is not a rule. Here we see it here. So for us to understand it easier, we just group blue and red. Blue is the bullish candle and red is the bearish candle for the seller. The most trading platform use white color to refer to bullish candlestick, but the color doesn't matter. You can always use whatever color you want. So you can find different colors used to differentiate between bullish and bearish candlestick. However, the filled part of the candlestick is called the real body. This is what we are concerned with, the real body of the candlestick here. So in that case, this here is the body. That's what we're concerned with. This here, again, is the body. That's what we're really concerned with. The thin lines poking above and below are called the shadows or the wicks. The top or the upper shadow is the high and the bottom of the lower shadow is the low. So we say shadow, we call them wicks because we're used to talking candle. A candle has wicks, right? Every time you look at a candlestick, ask yourself these questions. What is this story here? What is that candle telling me? Are the bears or bulls in control or are they even? What is this candlestick forming in relation to significant price levels like support or resistance level? Every candlestick has a story to tell. To understand the meaning of why candlesticks form in a unique kind of shape, you need to go deeper and understand the reasons that cause it to form that way. Right. So before we go into that here, let's go back to this candlestick here. We have this candle that opened here. It opened here. The market came down just a little. It went all the way up here and it came and it closed here. With the length of the body of the candle, we can say that we have a strong bullish influence in the market because we have a long body and a very small wick. So the bulls are strong in this here. In this side here, we have the opposite. The bears are strong. It opened here and we have a long body and small wick. So we can see that this is a market with momentum. It is actually moving. You know, when you look at your chart, sometimes you see some long wick and some little body. You know, not much is happening, just some spikes. But when you see full body candles like this, it tells you there is momentum in the market. So let's see. Bullish and bearish reversal candles. Right. So we have signals to go bullish for us to go on the buy, and we have signals to go bearish, signals for us to go on the sell. These are different types of candlestick patterns here we're looking at here. We have what we call the dragonfly doji. When we see the dragonfly doji, we know that this is a bullish candle. So that's a signal for us to go up. We have the hammer, we have the inverted hammer, we have the bullish engulfing, piercing line, tweezer bottom, bullish inside a bar or the harami. We have the three white soldiers and we have the morning star. These are some basic kinds of candlestick patterns that we need to understand. Then we have the gravestone doji, which reverses the opposite of this here. The dragonfly, we have the hanging man, we have the shooting star, we have the bearish engulfing, just as how we have the bullish engulfing, but the bearish engulfing is for the bearish movement. We have a dark cloud cover, just as how we had tweezer bottom, we have tweezer top. We have bearish insider bar. We have the three black crows, and we have the evening star. That's a lot to remember. But here's what, as we keep going over and over, and we get into the trading deeper, as soon as you see these candlestick patterns, you should be able to spot them and know exactly what they are. And they signal what's going on here. So we also have indecision candlestick. So a while ago, we were looking at bullish and bearish reversal candlestick. Reverse, we're going in one way and we're going in the other way. So the reversal here we're looking at is when we see these kinds of candlestick patterns, it is going to tell us here's what the market is about to reverse, is about to change direction. So these patterns here we're looking at are reversal candlestick patterns. Once we see them here, they're going to tell us here's what you need to take stock, because when these appear, the market is about to change direction. Then we have indecision candlestick. As the name implies, an indecision candlestick is one with no directional bias. In other words, it doesn't hint at the market's likely path forward in the way a bullish or bearish pin bar does. These formations usually occur during consolidation, but they can also form at support and resistance. Again, let's go back here. This candle tells us things are happening in the market. We have a full body candle that's going up. The market opened here and the market went all the way up. It went up here, it closed a little below here. So you know what? No, I expect next candle, when it opens here, the market might continue going up. Likewise, with this bearish candle, which opened high and it closed low, a full body movement tells us the next candle is going to open right at that point, and most likely is going to go down. We're going down for our sell because these are full body candle with high momentum in the market. So, all right, so indecision candle implies that, listen, man, we're not sure if we're buying or selling the market. So the candle would not be a full body candle like that. You may see a high wick at the top, a high wick at the bottom, and the market is just there. So again, remember, the type of candle tells you what the momentum is in the market also. So we have indecision candlestick. We have the doji candlestick. Doji is a Japanese term. Doji is one of the most important Japanese candlestick patterns. When this candlestick forms, it tells us that the market opens and closes at the same price, which means that there is equally an indecision between buyers and sellers. There is no one in control of the market. Again, we're looking at the doji, right? It says that the market opens and closes at the same price. So that's another candlestick pattern here. So we're looking at indecision candles, the doji candles, right? So we have the market opens and closes at the same place, as we just said here, right? So that's for our doji. The market opens here and it closed at the same rate here. We can see the market went up high at that level, and it also at that time it went down low. But here's what, it closed right here. So this, unlike the first candle, we are looking at a full body candle, which says there's a lot of momentum. We can safely see here that nothing much, a matter of fact, nothing has happened here. The movement is not so much. and the market didn't move so much because look at the length of the candle. It's a short candle, but right where it opened, right there it closed. This tells us that nothing is happening in the market. It may be at a consolidation stage. But here's what. On the other hand, we have the long leg doji. It opened and closed at the same rate, but here's what. Look at the wick or the shadow. We have a longer low and a longer high. Again, they open and close at the same time. So let's go back to this one here. Just the regular doji. Imagine looking at a candle like that here, and the market is here. You may see a spike up, come down, spike down here. And that might be the market moving slow. Unlike this one here, you will see a higher spike up, a higher spike down. So here's what. Let's say we're in the market and you have 20 people trading. 10 of them may say, here's what. Let us push the market up. So the 10, just as the 10 push the market, try to push the market up, the other 10 on top say, no, joke you're making. We're pushing you down. So you come back in the middle. We're back in the middle here. Then the other 10, after we rest a while, the next 10 say, you know what? We rest now. Let's try to push them down. The 10 try to push down low. It came down low here. But then the others push them right back here. It's the same thing happening here. But here's what. We may have 10 people for up or down moving it here. Whereas in this one, may have maybe 4 people. So this shows you a little more momentum, but it comes back to the same. There is no strength here. The buyers and the sellers, they are equal strength here. So this is our long leg doji. Doji candlestick. As you can see, the opening price is the same as the closing price. This signal means that the market didn't decide which direction it will take. When this pattern occurs in an uptrend or downtrend, it indicates that the market is likely to reverse. So again, look at this here. We had full body candle. Look at this here. So the market opened here, the market went up. That high came down, it closed here. The next candle opened right here. There was no lower price. The market went all the way up, it was pushed down a little. There's a different candlestick formation here now. Look at this other candle. The market opened right where this one closed, came down a little, went up, but it came down low and closed. This tells us a lot more than what is happening in this previous one here. Look at this other candle now, open here, down a little, went up, but it didn't go so far. It was pushed back down a little. Then we come for this doji candlestick. The market opened here. It went up, it came back to the middle. It went down, it came back to the middle, and the market closed here. And the mere fact that we see this doji candle happening here, it gives us an indication that the market is about to reverse. And so said, look at the other candlestick here. Full body candle started here. It opened here, went down, closed lower down here. Look at this other one here. The market went down, but the market pushed back up. This push back up. So this candlestick, this candle pattern is different from this candlestick here. If you're looking to pong something and you want a mallet or a hammer, you can't take this one to hold anything to pong because you don't have a long enough handle. But look at this here. You can take this here and pong something. You have a long handle to hold. So this tells you it's a different candlestick to this one here. The market opened here. It was pushed up here. The market came down as low here, but it closed down here. So we know the market is still going down. But here's what. We see a long wick, which tells us something. But look at this other candle again. It opened here. And we know that the market closed here because of the color of the candle. Remember, if the market closed lower than where it opened, we have this candle color here, right? So we certain that the market closed down here. That's why this one opened here, try to go up here. It closed higher up, however, right? That's why we have this color candle here. That's a bullish candle here. It closed higher up. The next candle opened here in the market here, went up, but it didn't stay up for long. It was pushed all the way down here, but it ended here. It closed here. Likewise, this candle opened here, tried to go back up, back down. Each of these candles tell you a whole story. Let's go. The chart that we just looked at shows how the market changed direction after the formation of the doji candlestick. The market was trending up. That means that buyers were in control of the market. The formation of the doji indicates that buyers are unable to keep price higher and sellers push prices back to the opening price. This is a clear indication that a trend reversal is likely to happen. So look at it again, the market was going up. When we see that doji pattern here, the market reversed and changed direction, right? Remember always that a doji indicates equality and indecision in the market. So you don't just say because you see a doji market reversing. All it says is that you have an equal strength of buying and selling pressure. And people haven't decided whether or not we're going up or we're going down. So we stick in neutral and it's right there in a flat, full 180 degrees pavement. We're in neutral, we're not going forward or back. We have to make up our mind. Until we get the vehicle to start, we say, well, we're going in forward or we're going back. You would often find it during periods of resting after big moves, higher or lower. So like, if you look at gold today, gold made a big dash for the down. And after gold made the dash for the down, gold decided to settle and relax for a while. So most times after you have big moves in the market, you have those doji candle indicating indecision. People resting and taking a blow to decide whatever they do after. When it is found at the bottom or at the top of a trend, it is considered as a sign that a prior trend is losing its strength. So if that doji pattern is found at the top of the trend, it tells you that this trend is losing its strength, so it's going to reverse. If it is found at the bottom, it tells you the downtrend is losing its strength and an apparent change in direction may happen. So the doji in live chat here. So we're looking at it here. The market is going up. So the market was up, the market was coming down. We had a little consolidation going on here. We have a doji right here, which indicates indecision. Straight from here, the market starts going up. The market is going up. Remember, the market goes up, it comes back down a little, retracement, and the market is going up. And we see all different shapes of candlestick pattern here. But look what's going on here. Even up here, we look at that candlestick here. Look at the doji here. And after that doji has been formed, we realize now we have confirmation that the market started going all the way down. So it is important that we understand and we look for those candlestick patterns, those reversal candlestick that tells us when a trend is about to change. We have what we call a spinning top candlestick pattern. So this reflects indecision in the market, which simply means that the buyers and sellers are pretty much at even. Spinning top is a candlestick pattern and substantially shorter body surrounds on both sides by 2 long candlestick wicks. In other words, a spinning top candlestick is often regarded as a neutral candlestick. So, spinning top. Open at the bottom here. That was a low here. So the bears tried to push the price down, but they didn't manage to hold it significantly low. That's why we have that long wick at the bottom here. Likewise, the bulls tried to push the prices up, but they still couldn't hold it. So it opened here, went down. No, we ain't keeping it down. We're going up. We push up high. No, you ain't keeping us up here. We push it back down on the price. The market closed here. And it look like a top. You can hold it at the bottom and you can spin it on either side. Likewise, this here, the market opened up here. And we know the market opened above because it's a bullish, it's a bearish candle. And it means that the market has to close below for us to have that color. So the market opened, maybe it was pushed up a bit. No, it couldn't hold. It was pushed down a bit, it couldn't hold, and it was pushed up here and it closed at that point here. So this is where we have a spinning top candlestick being formed. The spinning top candlestick has a potential reversal candlestick in the context of where it forms on a price chart. Remember, we're looking at reversal candlestick patterns. So when we identify the doji or we identify the spinning top, it gives us an indication. It's not decisive. It gives us an indication that the market is about to reverse. For example, if I see a spinning top candlestick pattern form on a major resistance level, I would consider it as a potential bearish reversal candlestick, and I would place a sell stop order a few pips under the low of the candlestick. If price breaks the low of the spinning top candlestick and heads down, it just adds further confirmation that the downtrend may be just about starting. So if you see that pattern at a resistance level, remember that pattern tells us it's indecision. No, people still aren't certain whether or not they're buying or they're selling. And if you see that happening at a resistance level, it tells you something's going to happen. Remember, resistance level is it trying to go up, but it can't go above that level. So if something's at a resistance level, is being prevented, like the ball bouncing on the ceiling is preventing it. So once we hear resistance, we are thinking of bullish, trying to go up, but it cannot go up. And if it is found at a resistance level and it's a reversal, then we expect the price to go down in a bearish movement. So just to be safe, we don't just enter the market here, but we can put a sell stop because we look to sell a few pips below the low of the candlestick. So once the price breaks down below, our trade is going to kick in and we're going to get into the market. Similarly, if I see a spinning top candlestick form on a major support level, that is the market is trying to come down, the flooring now is trying to come down, but it cannot penetrate that level. It is there. If you see it on that, you get an indication. Here's what, that ain't go whole. I believe the market is going to reverse and the market is going to go for a bullish movement, it's going to go for a buy. So you will consider it as a potential bullish signal. The confirmation is when the high of the spinning top candlestick pattern is broken and price start rising up. So what you do, you put a buy stop pending order a few pips above the high of the spinning top candlestick. And if it breaks it, you're in for a buy trade. What does this mean? We can enter the market in various ways. We can enter the market at market rate. So I can just hit buy now or sell now and enter the market. Or I can do pending orders, which means I can put in an order pending the rate. So I can put in a buy order or a sell order pending. So when the rates reach at that particular value, the order is going to kick in. So I believe it's going to go for a buy, but here's what, I don't want to enter now for a buy. So I'm going to put in a pending order, which means that if later on the market hits up there, automatically my trades are going to go in and I'm going to get into the trade. So you don't always have to be there physically to put in every trade yourself. We can manually put in trades or we can set the trades on pending orders so that the platform automatically enters the trade for us when it reaches the levels that we set. So we have what we call a buy stop, we have a sell stop, and we have other options which you're going to encounter as we go, right? This concept can be applied to trend lines, Fibonacci retracement levels, price channels, chart patterns, etc. There's a lot of setup where a spinning top candlestick pattern can be used as a buy or sell signal. But the important thing is to make sure there are support resistance level involved before you make a trading decision. So here's what, you have to try to not mix up the candlestick. When we are talking about spinning top, what gives us added confirmation is if they are found at support and resistance levels. So once they are the support and resistance level, it gives us more support, more confirmation that we are in for something good. All right. Any questions so far? That's a lot of talking and no question, no nothing. Anybody? Or we can go ahead.
You can go ahead.
Right. The color of the spinning top candlestick does not matter. What is important is where it forms. Remember, key to the formation and the indication of our spinning top is support and resistance level. If a green spinning top forms on a resistance level, it should be considered a potential bearish signal, even though it is a bullish or green candle. Again, remember, if a green means that the market is going up for a bearish movement. But if the spinning top forms on a resistance, that means it's trying to break out on top, it's going to push up, but it's not able to push up. If it is formed at that level, it should be considered a potential bearish signal. So even though the candle is green, but it tells us here's what, you can't penetrate the ceiling now, back down you're coming. So you apply the same logic if it is a red spinning top that is formed on support. So even though we're looking for red candles in a bearish market, but right at the support where it can break the support or is not breaking the support, we see that red spinning top. I believe the market is going to change into a bullish movement. That's what this is simply saying. So let's assume that on the first chart on the left, so let's see that chart here. Good, right? So all the time we're going up, we're going up, we're going up. What we see, and let's just look at the top here as resistance. So it hits resistance, and right at the resistance level, we have that green spinning top being formed. Even though it is green, because it is at the resistance level, it tells us the market is going to change. And here's what it closed. We have a reversal of the market. On the other hand, look at this here. So the market is coming down for the bears, is coming down, it's coming down, it's coming down. And then we see this reversal. We see this spinning top being formed. What happens? The market changes direction. Likewise here, and it says, the second chart shows the red situation. So this one shows the green situation. Let's see what the green situation is about, right? So let's assume that on the first chart on the left, price is going up and it hits a resistance level and moves down. And the next chart to it is on the right says price is going down, it hits a support level and it bounces up. So price going down, hits support, bounces up. Price going up, it hits resistance with this pattern, bounces down. Remember, the color of the candle doesn't matter, right? We said that earlier. So it's going up, green candle, it hits here, it comes down. It's coming down, a green candle with that spinning top, it goes up. Same thing here, it is going up, look at the color. It's a red spinning top, it comes down. Once it hits resistance, it is going to come down. Here it's coming down, it hits support, it's going up. So the colors, they don't matter here. So at each of these two situations, the turning point was the formation of a green spinning top candlestick pattern here, right? In this one here. Here, the turning point was the formation of a red candlestick pattern. So once they are formed, once the spinning top is formed at a support or resistant level, color doesn't matter. However, not every spinning top candlestick is created equal. So I totally ignore any spinning top candlestick that does not form in levels of significance. What are these levels of significance? What is these? You totally ignore any spinning top that does not form in significant level. What are the significant levels? Support level. So if the spinning top is not formed at the support level, it is not important. If it is not formed at resistant level, it is not important. Remember also trend lines. So support and resistance is not always horizontal lines. Our trend lines, they act as dynamic support and resistance level also. So diagonally as they are, they also act as support and resistance. So if we have a spinning top form at a trend line, it is as important as on a support or resistance level. Again, what are important levels or levels of significance? The Fibonacci retracement levels. There are some important levels on the Fib that are significant levels. The 38, you talk about the 38, you want to go to 61 or wherever, these significant levels are important. And we talk about price confluence levels. These are important levels. So if we have the spinning top being formed at these levels, then we can say, here's what, they are important. These are things for us to look at. So these are important price levels, which I look for and identify in advance. And then I wait to see if the price reaches these levels. So you can have your support, your resistance, your trend lines, your retracement, and those other levels. You can have these levels and you wait to see what happens at those levels. Remember, trading is awaiting something. You wait for it to come to you, right? So you wait to see if price reaches at that levels. If price reaches at these levels, the next thing you do is watch to see if any reversal candlestick forms. So once price gets to that levels, you are looking now for those reversal candlestick patterns, including the spinning top or maybe the doji, which would give me a clue of the most likely direction price is going to take. So I prepare to take a trade based on the clue I get from these reversal candlesticks. So you wait to see if when it comes and it hits the trend line, the candlestick that is formed when it hits the trend line. So trading could be simple. You draw your levels, your support, your resistance, your trend line, and you wait to see when price gets to these lines, what formation or what candlestick pattern is formed to know what's your next move. This is how you trade using price action. It's simple, as that says here, it's nothing complicated. Price action trading is all about identifying important levels and then wait for the price to hit these levels. Then we look for the buy and sell signals. And for that, you use reversal candlestick and then you place your trade. So we look at all those levels here and we wait to see what happens when we get to those levels. So in summary, indecision candles. Indecision being the keyword, price can move in any direction, exactly. So indecision means that they're not going up, they're not going down. We have candlestick and we look at the pattern, we look at the shape of the candle to make a determination. If it's a full body candle, if it's a bullish full body, we know the price is going up. If it's a bearish full body, we know the price is going down. But if we look and we realize, here's what, we're looking at a doji or the spinning top, that shows indecision. Price ain't going up, it ain't going down, right? So that's what indecision means. Price can move still in any direction. So we wait to see what pattern is being formed. These candles only grab our attention for a possible setup. I like that phrasing. The candles only grab our attention. Why they grab our attention? Because we are waiting for them. We draw our support, we draw our resistance, we draw our trend line, and we wait in. And once they hit those lines, they grab our attention, and now we see, okay, it hits my support, or hit my resistance. Let me see the pattern that is formed to make a determination on what's going to happen. We are going to counter trend trade once we have confirmation that price has reversed. So if it's in a bullish market here, and we get those signals, you know what, we're going against the trend now because we realize price is going to reverse. When price prints a morning star at support or evening star at resistance, right? Then we have the confirmation that we are going in a counter trend against the trend. We have confirmation now. Remember, we had a list of candlestick patterns, morning star, evening star, and all those things here. If price continues and breaks the key levels after the indecision candle, we are going to trend trade. We are going to trade with the trend. Remember, we always trade with the trend anyways. When we see those patterns, we know the trend is reversing and we enter that new trend. So we are trading with the trend at all the time. The important thing about this lesson is learn how to read price action reacting to the key levels. Indecision candles also can be found in the middle of move, which almost always mean we are continuing with it, right? So indecision candle, we can find them in the middle of move. So not at any major zone or support or resistance or trend line or whatever. So if we see them in here, it tells us here that no, the market didn't make up its mind, you want to change. The market is going to continue the trend. So in the middle of an uptrend with no major zone, we see an indecision candle. It's just that people just making their mind up, you know what, but most likely it's going to continue that trend. And if we are already in a trade, this candle would help us to hold our winning position. So we are in a trade for the buy or the sell, and we see the indecision candle coming up. We say, I'm staying in my trade. There is no full confirmation that something's going to happen. Nobody can decide what they're doing yet. So we stay in. It's like you're on the bus and you're going, and then you decide the bus stop here. Should I get up at this stop, whatever? No, you're not certain. The driver ain't go wait for you to make your mind up. The conductor closes the door and the bus going. You stay on the bus until you actually make your mind up. When you see you reach home or you see some signal or some sign that this is your location, then you stop the bus and you make your mind up. You decide and you get out. But as long as you're undecided on within any major area or zone, we are continuing that trend. This is the end of our presentation. Question?
The doji and the spin on top at support and resistance, they basically indicate the same thing.
Yes.
Okay.
So because really and truly, they are indecision candles. And it's like you look at the market and the market is moving. And we know the key levels. That's how we zone up. We look at the key levels. We draw support lines, we draw resistance lines, and key levels at the price level that the market was at before. And if those patterns appear, for various reasons, the market might be moving slow. But if those candlestick patterns appear at no major price level zone that has been hit in history, then it tells us here's what, nothing to really consider here. But if those things happen at pricing levels or zones that were once support or once resistance, it tells us here's what, something is about to happen. Now the price has settled back there and we see those formation here, it tells us something is going to happen. That's what it is here. So the zones or the levels are very important when we look at the formation of those patterns, also those kind of candlestick patterns. But you should be able to just look at a candle and determine a lot from it. If I just come on a chart and I just see a candlestick like this, I expect the market to have some volatility, or some volume in the market. When we see some little candles, let me see, let's find one from the chart here. When we see some like that, candlestick like that, nothing is happening in the market. The market isn't going anywhere. That's just consolidation. Matter of fact, that may be even burial. Nothing is happening in the market. The market is just stand still. So we can realize there is no buying or selling pressure. The pressure is equal. Nobody's really doing anything here. But this here, just the shape of this candle tells you nothing is happening. No major move. Because we can also have candles. We have like the spinning top. The spinning top has a little more volume in it because we can see colors. So look at this here. It is neither red nor black because right way it opened, they close. But if we look at a candle like this.
Mr. Millet.
Yes.
Not meaning to cut you. Could you look at someone on a real life chat, please, if that is possible?
Sure, we can. Yeah, we can get on the chat and we can see that. Right. So here we can see this one has a little more body because a little more movement, a little more price action is taking place here. Nothing really to consider, but it is not as dead as looking at, where are you? Not as dead as looking at this here. Nothing is actually happening in that. All right, let me minimize this window. 1 second, let me pull up my trading view. No, in Safari. I'll bring Chrome. I'm just opening up my browser. This computer decided to give me some headache for the last few days. Change hard drive on it, change cable. This evening I just take off one piece of memory. Just decided just want to give me a workout. So it's not as steady as it's supposed to be. All right, trading view. All right, are you seeing my screen?
Yes.
All right, so let me.
Can you make it a little bigger, please? Use the whole screen.
All right, 1 second. So I moved that computer. See how that just circling here? Yeah, I just moved it from 16 gigs of RAM to 4 gigs because I've been having, see how long it take for that chat area to come up here? Yeah, it's been giving me some issues. Yeah, we know that. Let me just see if I can just make that bigger so we could actually see something happening here. You see, we have a candle here. Look at that candlestick here. We have that alone shows, look at this one here. My screen, let's move it a little. You see that candle here that shows you just at this level here, equal buying and selling pressure. Let me just see if I can make it a little longer so we see it here.
I don't know if others have seen, but I'm not seeing anything.
Oh, you're not seeing my screen?
No, I'm not seeing it.
I am seeing.
Me too.
Okay. Yeah, and I don't know why you're not seeing. All right, let me stop sharing. Let me share again and see what's going to happen. Are you seeing now?
Yeah, I'm seeing now.
Okay. Yeah, I was just looking at this here. So look at it, just similar to what we just looked at here. Look at a candlestick here that shows you, look at the wick. Unlike this one here, that shows you the price was up here. It's a long wick at the top. So we just go back from the start when we're looking at different types of candle. Look at the first candle pattern that we look at here, full body, with that wick at the bottom, that wick at the top. So it shows you we have some momentum in the market that's been going on here. These long candles here. We come and look at this candle here that shows you not much been happening here. So even though the market went back, so the market was up here, the market was pushed down all the way here, right? The market opened here, it was pushed down here. So it seems as though the market wanted to come down. The market opened here and the market was pushed up here. Closed here, it opened here, I guess tried to go up but didn't go up, tried to come down but closed at that level here. So this equal buying and selling pressure formed right here.
Okay.
It dropped.
What about the other one right before it? Will that be considered 1, 2? 1, 2, 3, 4, 5, 6 candle before.
So 1, 2, 3, 4, 5. This one here.
What's that? That's the same thing, spinning top?
No, that's different. We have
That's a long leg doji. Sorry, that's a long leg doji. That's okay.
Long leg doji. Can someone confirm?
But that do not say anything there at the bottom of a downtrend.
So this here, but still here, this wasn't This wasn't a downtrend, eh? I mean, still we could look at that here. Okay, let's just look. Look at what's going on here. Look at here. We're still in the uptrend here. Okay, actually it broke the trend line. Let's just put it on. Right, if we just decide to just so again, key when we're looking at all those things here, we look at what's happening here. So we look at that here. So we're on the trend line here and we are going on the uptrend all the time here, right? So the market came, so it came down that here, the candle, you see what happened here? So look at even where that candle closed. It closed exactly on the trend line. So this is just something.
Can I ask a question, please?
Sure.
Why you put the trend line there and not 1 to 3 candles before or 2 candles before? I just want to know. I'm thinking you. I know you know better. This. I just want to know why you put it there.
Up here.
Yeah. Yeah.
Yeah, but if okay, so okay, let's see what happens if we move it. You move it here.
It's just curiosity on my part. I'm not debating or trying to.
Right. So if we move it here, right, we move it to that where you're talking about it here.
Look
at how many others wicks and bodies that are below the trend line.
Okay. Okay.
Right.
Okay.
So this trend line here would have been effective. Okay, let me tell you when I would have done this. So this trend line here would have been at this candle here. So these candles here weren't formed yet. From that red these candles weren't formed yet, right? Let's just say these candles weren't formed yet. We're watching the market and we're watching. So the market is on our uptrend and we're going up. So we're in for a trade here. Let's suppose we didn't get into the trade and we realize the market is so far up here away from the trend line. No, I'm not going to get into the trade. I'm going to wait for it to come to the trend line.
Okay.
So the market is going up here. It pulled long here. It came back at the trend line. It continued going up. And we look at that back to the trend line. We can enter here again and it come back. But this time when it came down here, look at it. It broke the trend line.
Okay.
And most of when it breaks the trend line here, it is setting up for a different trend. It can here, but we still into the trade here. Because even if it broke the trend line here, look at a little consolidation, and that's on the 4 hours. The 1 hour, you're going to see a lot of candles. So that was an area of consolidation.
Okay.
1, 2, 3, 4, 5, almost a whole day. Consolidation almost a whole day. Then you realize, okay, fine, the market start deciding, okay, you want to go back up, you reach to that level. This candle here says the market opened here, try going higher, which it did, but it was down right here. And because it was pushed down, look at this here. There was no, let me draw a vertical line on it. Let me just put that line here. You just look at this. I just look at that candle and see what story this candle is telling us. This red candle, right? So the market was going up. So the market, this candle opened here, came down, went up, but it closed higher, right? With a wick here.
Okay.
This candle opened here. It went higher. Okay, so we're going for a buy still because it went higher than the other previous candle. So we're going for a buy still. But then you realize the candles, the markets are being pushed down. It was pushed down to that level with no resistance. Look at it, it ended flush at the bottom here. No wick below to say, well, the buyers push it back up. So this candle closed with the sellers in full control because there is no wick at the bottom. You see what I'm showing you? Let me just move it out in the clear here. Look at this red candle.
Yeah, I'm seeing, yeah.
No wick at the bottom. So the sellers were in total control. But as soon as the next candle formed down here, the buyers say, yeah, we're going straight up. So the buyers went up. They didn't push it as high as. So we see here, it's just a game of buyers and sellers playing. You see it here? We're pushing up, we're pushing down. We're pushing up, big move. Because that's the 4 hours. Let's just measure. Let's just measure that and see. $31 pips, right? So here we have momentum going on here. But look at when it reached, so this candle here, the buyers say, no, we ain't giving up. We're going, the buyers reach up here, but it couldn't go that high. Look at this candle here now. The market opened here. The buyers couldn't go higher than the previous candle. And then the sellers decide, okay, fine, we're pushing down. But they couldn't go far. The buyers had them here. But no movements in the market here. That alone shows indecision. This candle here tells us some indecision is taking place. And because of the indecision, look at what happens after the indecision. Buyers and sellers couldn't make up their mind, but the buyers couldn't push it higher. Then the market just falls all the way coming down. Look at this candle here. And we made mention of something. Let me just move the line over here just to mark the candle. We made mention of something like this. Remember, we look at key support and resistance level, which straight away we could see that this area here is an area of support and resistance anyways. Let me just draw this here. This here is an area. See that? That's an area of support right here. Right? Look at how many touches. It's an area of support right here. So even here, we can see it here as a little area of resistance right back here. But look at the formation of that candlestick here. It happens in two areas. One, an area of support and resistance, and also on the trend line. You see it touch right on the trend line. Remember we said key area, support and resistance area, and also the trend line as key area. Right? So we have that here as on the trend line here. Also is an area of support and resistance. So it's an area worthy of looking at here.
But at that time, it's late. You lose a lot of pips already. Well, I guess we have to wait.
So again, remember the time frame I'm looking at it. I'm looking at this. I'm looking at it in the forwards. So then if you go down the 1 hour, you're going to see a lot more things happening and be able to get into it here.
So Mr. Millet, when you look at it there on the 4 hour and you see it there on the 4, right? And you think you could take the trade there, but then when you go on the 1 hour, as you said, you see something and it's not showing you to take it. You didn't see a spinning top, or you didn't see a doji, or you didn't see another sign. You still take it because the 4 hour has it.
So you see, at the end of the day, even if the 4 hour and key also would be the length of the candles, that tells you what about price action. Yes, it's going to happen. It may take longer to happen than other times here. Because look at that kind of area here. Remember, since I'm on the 4 hours here, that's about 2 days we're looking at here. Nothing much has happened. It would eventually go in the direction, but it's going to take a while. So even if, fine, I see the formation. Let me see what happens in the 1 hour. I go down into the 1 hour. The 1 hour would show you more that's happening. And that's why we decide, okay, fine, we're going to get into the trade on the 1 hour. We're going to get into the trade because we're actually seeing what we want to see. But there are times you look at it and it may be consolidating. So you don't just make your movement here. Okay, fine. I look at it here and I see that's a good sign for me to move. But that kind of movement would be a consolidation in the 1 hour. Okay, so let's look at this candle here just because that has been marked. Let's go down in the 1 hour and see what's going on with that area here. Let me vertical line go.
He disappeared.
Yeah, I need to really sort out that laptop. It's not.
No, man, it won't be so far back. Would it?
I don't find you so far. Yeah. Yeah, look at trend line.
Oh, okay.
Look at the area here. Look at what's happening. All this area is consolidation. Now we go down the 1 hour. So you see, even though
it wasn't looking like that on the photo, it was looking as we're going up.
Exactly. But yes, but eventually look at it here. It's going to go up, but look at the amount of time it's going to take after.
Okay.
So not because we see it in the 4 hours here and it look as though, yes, it's just a move for us to make, but it's consolidation. Look at these candles and them here. Look at the shape of all these candles. You realize not much activity has been happening. Look at all here. Not much activity has been happening. So that's why when you look at it here, I have to get my charger. When you look at it, you have to switch between the different time frames because they are going to give you an idea as to what's happening. So you may see the signal, and that's why you don't just take the signal on and you enter into the same place where you do the analysis. So I'm doing the analysis on the 4 hours. I'm not entering the trade on the 4 hours because I'm seeing it looking as though it's a good entry point. But when I go down to the lower time frame, it's in consolidation. It is a bad time for entry.
Okay.
So we always have to switch between our time frames. And that's what's important. The higher time frame guides what's going on. So in the 4 hour, I see this, I know here's what, this is the direction is going to make the move, right? And this is what happens when Mr. Jack draws up the chart and we mark up the chart. We wait, because on the higher time frame, we see the signal, yes, we know, but what's happening? We have to wait. Because on the 4 hour, you see, okay, fine, we break out of that zone. Yes, but even if we break out of that zone, so look at that zone here. All right, so that, let's just look at that. That's on the 4 hours, eh? So we have a few touches around that area. So remember, it's that zone. I just put one line, right? Just to show it here. So that's the zone here. So that has been what? That's a resistance, right? We see we got quite a few touches here and we're on the 4 hours. So that zone, that whole area is a resistance zone. So we see the breakout, it break out from it here, and then we come back to get a retest. Look how long after. So it break out here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 folds, 44. 2 days. Huh? You see that? 2 days after the retest, convincing candle, and then the market move. So this is why it's important to have the time frame on it here, because we may see it and we decide, okay, fine, we're going to wait for it, but that's 2 days for it to happen. So that's why the time frame is really important. So we look at the pattern, we see them, but we always go down on the lower time frame, and we have to learn to wait. What we can do, as was made mention in the presentation, is working along with the pending order. Limit, sell, limit, buy, stop, sell, stop, based on what it is, because we just may not be around. So we just may not be there to actually place the order physically. So you do all your markup, and you may have this as, you know, so okay, fine. I'm looking at this here. I realize it broke through the zone here. It break, and I'm waiting for the retest. Fine. So I realize the market is coming down. So we're in that bearish trend here, but I want to go in for the buy. So what I'm going to do, I am going to do a buy limit, because I'm going to do a buy limit for here, because I know, okay, fine, it's going to go down, it's going to test, it's going to retest, and then it's going to come up. So I put up a pending order for a buy limit, for example. And I wait.
I find buy limit risky.
You find it risky?
When I say that, because you might put it to go at 1.5, and it never reach 1.5, it just reach 1.6 and back up. And then you miss a whole opportunity there. Whereas if I had put a buy stop at 1.9, I could have catch it from 1.9 up.
Right. Okay, but here's what. Fine. Remember, the difference between the stop or the limit is where you are in the point in time. Eh? So if the market is here and you want to enter down here, remember it's coming down. We want it when it's coming down. Remember, stop and limit has two different things here, right?
I mean, I don't know how far down it's going to go, so I might have entered for down the way you have the cursor pointing, I might have entered for down there, but it never came down. It stayed up by the way the wick was instead, and I missed the whole opportunity.
So in that sense, you know, you could do a buy stop here.
Right.
Comes down, even if it didn't reach your area here, when it coming back up, it take you on the buy on the stop, and it continues going up.
Could I ask a question while you say that? So if you had put a buy stop there, right? And it coming down, once it come down and it reach down, will the buy stop be activated or only if it coming back up? So is it possible that you think it will go up, so you put a buy stop for there, but then it just continue going down, 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 and the buy stop was activated, so then it will just put you in loss as instead of going up in the buy, it went down in a sell, and it will just, the loss will just start increasing as far as it going down?
Okay, so here's a question I'm going to ask you. What actually activates the trade?
Once it reach on that point, to me.
Exactly.
But then I just heard you say when it's going back up, it will activate it. So that's why I was wondering.
All right, so here's what. What activates your trade is when your price, your entry price is touched.
Okay.
This is what activates the trade. Imagine you're home and you want a bus to go to town. You're living in Gulf Coast. You know, okay, the bus come through here and the bus going back all the way in cafe and turn and then come back.
Yeah.
So your son outside. When the bus is coming back, I want you to stop the bus for me to get on the bus to go in town.
Okay.
Because you know the bus go up in cafe. You could wait for the bus to go in cafe to come back down for you. And the bus may decide, you know what? I going out in Springs, we ain't coming back.
However, right.
The bus may turn in cafe and come back. But the time it taking, another bus decide I go make a short trip. I go make a short stop. So you stay in the veranda and you see the bus in the corner before you making a turn. And your son shout out, hold on, mommy coming. The bus didn't reach your home, but you end up going down to get the bus.
So when the bus come the first time, before it go to cafe, once you reach by me, before it went to cafe, it activated. Are you saying the trade is activated then, or the trade is activated when it coming back? When it coming back and it reach by me?
So this is the question I wanted to pull here. So here's what now. So you tell your son, listen, I have to go to town and the bus go up in cafe. When the bus is coming back, I want you to stop the bus for me. But your son is in the veranda and that other bus decide and no, he come and as soon as the bus reach in front of your house, the bus realize, somebody call and say, listen man, the bus turn on the other side yonder now. And that man decide that turning right here. What your son go do? Your son go say, well, let this bus go because you're waiting for the bus that go in cafe. He knows you want to go urgently. So because this bus come and he reach in front of your house, he calling the bus for you.
Okay.
So what activates the trade is your levels being hit.
Okay.
However, what determines the buy stop or the sell stop or the buy limit or the sell limit is at the time when you are placing the order. So you want to buy and you say, here's what, the market is going in a sell and the market is above my price. So I am going to put a limit. I want you to just go down as low as that. And when you reach to that low, head and enter the trade for me to go back up. That's my limit. The limit is this is as far as I'm willing to go. This is as far down as I am willing to go. So go down, stretch down, reach my limit and pull up and go. If it went down, but it didn't reach your limit, your trade would never get activated.
Right.
But when you do a stop, a buy stop, for example, for you to do a buy stop, it means that the price must be below the price to enter.
Yeah.
So while the price is coming up, you're just going to stop and hit your price and continue going up.
Okay.
So you tell your son, stop, the bus are coming in cafe. So when the bus coming back, the bus is just going to stop and continue on the journey. Right? That's the stop. But if the other bus that was coming up, your son stop it for you, you say, here's what, driver, if you decide to go all the way back cafe with me, I drop, because my limit wouldn't allow me to go all the way back in cafe. Maybe you go to one junction and you turn and you come back before the other bus comes. So your limit is how far you're willing to go in the other direction before you take your true direction.
Okay.
But at the end of the day, you enter the trade. What activates your trade is your price. I want to enter the trade at that price, get it in that year. So let's suppose right here, you want to enter the trade for a buy on this candle here. But when you come to the analysis, the market is down here. I am hoping that the trade goes up. So what I'm going to do, I'm going to do a buy stop. I'm going to do a buy stop right here because when the trade starts going up,
right,
I need to reach my price. It's going to stop, activate my trade, and continue going up.
Okay.
That's what's going to happen. However, you want to enter that here, and the trade right now, you do the analysis, it is here. You know what? So the market going to go up. I'm going to do a buy limit for that level here.
Okay.
Right? So the trade is going on. That's how
So
far.
I cannot enter buy stop below it.
No,
I think it will go down and then come back up. I cannot enter it.
It's a buy limit. My limit, I'm hoping that the trade goes all the way down as far. But here, this candle here would activate your trade because it touched your limit. If it was down here for your entry, your trade wouldn't have been activated by any of these because you didn't reach your limit. But the mere fact that this one reached your limit, it activated your trade, you're going to be in loss because it continues going down.
Right.
Stop loss all the way down here.
Wow.
So the limit, it comes down and then the trade bounces back now and the trade start coming back and making money for you.
Okay.
So this is why it's important to understand the stops and the limits. I'm going to do that here. But also identifying, which we started, we got into that here to identify, we are looking for spinning top. It's an idea as to what's happening here. So that's on the 4 hour. We don't see a lot of those here, but if we go down on a lower time frame, we might see a lot more of those.
Wow.
Look at doji right here. See what's happening here. All these candles here are indecisive here. Look at a perfect one here. See this one here? This red one right here.
And you realize it's at the bottom of a trend, but it's going down still.
But again, look. Look at that zone here. Remember, it's a whole zone we're looking at here. So even if we want to draw, we want to mark out that zone. You can always perfect it here. We want to look at, so we're still within that area here, and this is where these things are happening. So we have to watch it. It's significant when it happens at those zones. That shows you the key reversal that's going to happen here. So the market was going up here. We see that here. We have one here. We have an inverted hammer. That's what's here.
Yeah.
And then we come back here again. Look at that here. We see that other doji here, right at that area here. Look at that whole zone here. It's happening at that resistance zone here. And what happens? The market starts moving down.
Okay.
So we see more in the 1 hour than we would have seen if we were in the 4 hour. So sometimes when we are looking for things, we have to.
And you know something, the Adam Eve thing, you realize that's a Eve thing. That's the first time I'm actually seeing a real one since the last class where we did with Adam and Adam Eve. See where you just worded, there was the same place where you were showing, that's a Eve. So
as you start getting into those things and you start seeing them, and that's what we keep going up here. Eventually, we're going to reach to the stage where we just start seeing them, looking from the charts and so on. But a lot of those who see some of those patterns, we have to play around with the time frame, so we can actually see them happening here. So even here is not so much big movements in the market here. We look at those kind of candle here.
Mm-hmm.
Look at one over here. Look at this one right here. See right here?
Mm-hmm. Mm-hmm. But that one is no way, it's not in the bottom, it's on the top.
Exactly.
Mm-hmm.
We will still have a continuation of the trend because it is not at a significant level.
Right.
So it's not just seeing them here, but they have to be at a significant level, which is at a support or resistance on the trend line.
Okay.
Look here. So we have quite a few because the market has really been that dead for a while.
I could show an example with the fib one, because you said at a support level, a resistance level, trend line, fib and something else. Was it price action? Fib and something else.
All right, so let's
Before you continue, I have to leave now.
okay. We're
The
almost to the end.
recording,
Yeah.
I'll get the rest of the recording.
Yeah, we're gonna get a recording.
All right, thanks. Night.
Okay, bye.
That's the moment view. Oh, but this thing is acting up. So we pull off fib retracement
Mm-hmm.
here.
Right.
Remember, we have some key levels in our fib, right?
Okay, the 618.
Come on.
Mm-hmm.
So our key levels, we have this key level of 618, 0.38.
Right.
These are key
Oh.
levels. So if those things are happening at those key levels.
Oh, that's what you meant. Okay,
Yeah.
okay.
Look at here. From the bottom here to the top on that fib retracement here.
Mm-hmm.
Look at that 38. That 38 is right on. Look at it here.
Oh.
See where that 38? Let me drop a line right on the 38.
Okay. Mm-hmm.
Resistance.
Hmm.
That 38 is resistance. Then acting as support here. That's a key level also. So levels on the fib retracement is also key levels where those things that happen. So that's why we have to do is a combination, right? So it's not just support and area and resistance area, but also the key levels on the fib. So we can pull some of the key levels on the fib when we see the prices here, what happens at those levels and see what patterns are being formed.
My fib have a set of numbers. Your fib only have 2, 4, 6. Maybe I need to go and change my fib to have just 6. Mine have a lot of different funny things.
Yeah, I just those really key areas. These are just the areas I have shown on it.
Okay. Mine have a lot of funny things, both top and bottom. Like you see all there.
Yeah, so these are what I turned on and turn off, right?
Okay, then hold on. Leave it. Let me just take down some information, please. Hold on. Thanks. I'll be quick. Okay, thanks.
Yeah, so these are just the key areas that I want to show. This is what mean anything to me.
Okay.
It's so important. We can always modify ours to suit what it is here.
Okay, great.
But again, there is a lot we can do, and as we keep going over and over, we're going to understand. But the candlesticks are very, very important. They're very, very important. They tell us a whole story as to what's going on.
Okay.
That's what they do. So as we continue watching and playing around them, we're going to get the message that is actually being told from just looking at a candle. We know exactly what kind of pressure, who is in control, even by looking at 1 or 2 candles to get an idea as to what's going on in the market.
Okay.
All right.
Yeah, thank you.
Been on for a while, so any question or anything else, we can call it quits here. Anybody else?
It was good. I enjoyed tonight's class and I learned a lot. Thank you so much.
All right. So I'm going to end it here and I'm going to put the recording in the chat once it completes.
All right, great. Blessed night, everyone.
Good night. Good night.
Okay.
Thanks again.
All right, good.